So how do we get into this and how do we get out of this? I'm joined by Professor Jeffrey Sachs, economics professor at Columbia University, UN advisor, best-selling economics author. Thanks for joining us, Professor Sachs. First of all, do you see some connection between what's been happening in the global steel market, what we've just heard about in shipping, the price of oil? Is it just overcapacity as a general theme here?
I think your story told it just right. China has slowed down more than was expected. China was going to be the great sucking machine that was going to pull in commodities from all over the world. Commodity prices were very, very high just a few years ago. Oil, metals prices, other commodities. China has slowed down significantly. Those commodities prices have plummeted, not only oil, which is really in the headlines, but also metals as well, as your story mentioned, and the shipping prices themselves. So this is a China first story, and China is now either slightly ahead of the U.S. as the world's largest economy or just slightly behind in absolute terms, depending on whose numbers you believe. So China's a big deal for the world economy.
But you've got to be amazed at the capacity. I mean, there's the figures in the shipping piece that we've more than doubled the capacity in some of these shipping sectors. The price has come down more or less by 90 or 95% from the peak. I mean, those are just extraordinary ructions in the global economy.
It was expected that China, by some, that China would continue to grow at 8 or 10% per year. China now is growing at, depending again on who you believe, maybe around 6 to 7% per year, but still growing, but significantly less than was believed. China was not only the great machine pulling in the commodities, but it was a great export engine as well. One of the things that happened is that with all the optimism about China, money flowed into China, pushed up the value of China's currency, the renminbi, and China's currency is now overvalued. But instead of the markets pulling it down, China's been resisting depreciation of the currency because they feared that that would create even more ruckus, though I believe it's part of the correction that's needed to keep China's exports growing, in fact, and competitive internationally.
I mean, look, when you've got too much stuff, the world should try and stoke up demand and find people to buy it, and then everybody lives happily ever after. But it feels like for the last 20 years we've been trying to get global demand up and have just not quite found a way to do it sustainably.
Well, I think you've said it quite properly, which is that we have a lot of capacity. It's good capacity to build a lot of things that we would like, machinery and infrastructure and consumer goods. People have needs in this planet. It's a shame for these factories to lie empty. The question is how that demand is to be manifested. The usual way in recent years that has been attempted, whether in the United States by the Fed or in China recently, is through trying to boost consumption spending. But consumers don't want to spend so much. They're cautious. They want to save. And so what I believe we need to do more is to be aiming to boost investment spending. Investment spending, for example, in poor countries that desperately need infrastructure, roads and new port facilities and new power generation. Here we have the great capacity to build exactly those urgent needs. The factories are otherwise going to be empty. But those needs require government cooperation, financing systems, and our governments have been so short-sighted emphasizing consumption, they haven't taken the time to build the public investment that could really be vitally used by the world and keep demand high.
Okay, so that's an alternative way of spending money in some of those infrastructure investments. Look, just reflect on the problem for savers, because it feels, I think, to a lot of particularly elderly people who don't have mortgages and who do have money in the bank, that for the best part of the last 15 years, they've been earning very little on their investments. And I mean, it just seems like there's virtually nowhere you can invest. You're not going to invest in fracking capacity in an oil industry. You're certainly not going to be investing in building ships or manufacturing. What is going on for savers? Why has it been so hard?
That's also an excellent question. The big long-term saving goes through pension funds and insurance funds. Ironically, that long-term saving has then been put into the casino marketplace in short-term investments, trying to time the market and game the market. Whereas if our pension funds and our insurance funds, which are long-term saving, were investing in long-term infrastructure worldwide, whether it's, again, in the ports and the power generation, the clean energy, for example, that we vitally need, then there would be a good match of the long-term saving needs and the long-term investments that would be the counterpart. But many investors have noticed in the last few years that investments become a short-term game, and we don't yet have what in the jargon is called the asset class of infrastructure, which is the proper use, after all, of this long-term saving.
Jeff, look, last question. How worried are you at the moment? It feels like it's been a very gloomy year in financial markets. A lot of people talking about financial problems, global implosions. How worried are you as we sit here today?
I think you have to be a bit nervous because we've lost about $5 trillion of market capitalization in recent weeks with the stock market declines. But so far, this still is relatively small compared to the size of the world economy. The problem is if a panic were to break out, as happened in Thailand in 1997 or after the Lehman Brothers failure in September 2008. If we fail to keep liquidity and see a market seizing up, then we have very serious troubles. If there are big mistakes by the policymakers in China or elsewhere in this shaky period, it could turn worse. But so far, we have the means certainly to avoid any serious downturn as long as we're vigilant and keeping liquidity in the marketplace.
Okay. Jeff Sachs, thanks very much indeed. Thanks.
Pleasure.